Impressive daily closure coming out of this asset, but more importantly, we nailed the monthly and bi-monthly closures with flying colors. These macro closures cater the ability to forward look into higher probability direction, in this case, up. Welcome back to the channel on this Thursday. This is ARCa, and let's dive into ticker symbol ASRE. Let's kill them, team. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and dive in straight to ASRE. Okay, so we're going to go ahead and jump into the macro timeframes in just a little bit. I know everybody wants to know what happened there. What was the good deal? Let me turn up the volume here in my gain. All right, so now we're sounding good. Okay, so let's go ahead and take a look at this in the 8-hour time frame. Okay, so in this case, we're going to use the MACD as a representation of momentum, and we're going to use the opposition of price action to locate what is a divergent drive. Okay, so from this point to this point, marking off a higher low, right? And then from this point of the momentum to this point, marking off a lower low, that actually creates a drive of hidden bullish divergence, and it is validated here on the 8-hour time frame. And I used MACD because it was a little more clear to use it within the MACD structure instead of the RSI. But you know, sometimes it works like this, sometimes it doesn't. Sometimes we use stochastics, but more so than not, I use the RSI. Okay, so that drive of hidden bullish divergence absolutely has played out, and I think it's still suggesting a continuation to the upside. All right, so we've been shopping around this resistance level for quite some time, right? We've been speaking about this 4170 as a very tough area to get over. Very impressive close today, actually, at landing at that straight 42, and which actually marks off a very bullish outlook here for the coming month and months, right? So let's go ahead and take a look at a couple things. I'm just going to go ahead and dive into the, I'll go back to the 5-day time frame in order for us to see what's going down, right? So, but yeah, let's look at this. This is the monthly closure, the bi-monthly closure that we just got. Huge bullish engulfing, and also paired with a massive hammer candle, right? I know that usually the hammer candles would be better off with a smaller body, but still considered one-ish, right? So yeah, we have this buy formation, a bullish buy formation here, which would in essence suggest a continuation to that upside. Now, of course, we got that monthly closure as well, and that was a very similar situation down here. We got that bullish engulfing with that hammer candle, and now we have the validation candle. Okay, so I don't know if you guys have heard me say this before, but usually when we print a bullish hammer like this, we need the following candle to print bullish in order for us to validate a continuation to that upside. Okay, so in this case, yeah, we ended up getting this upside on this second candle, which validates the continuation to the upside in the following candle. Okay, that doesn't mean that it's just going to go upwards from there. I'm saying that this next candle would be the one to eventually close higher. Okay, so of course you can see right here that we ended up dropping from what the opening. Who knows how much variable happened here within 31 days, right? So it's just from here, 22.55 at open, it dropped to like 18.99, then it went up. It probably fluctuated within this a million times. You know, it's just it's a long-standing candle. And okay, so here is what I'm looking at. I want you to pay attention to this. Okay, so monthly time frame, we got that bullish engulfing paired with a hammer with an upside validation. Okay, now we just got the closure of the bi-monthly, same situation here. We have that bullish engulfing with the hammer candle, and now we would essentially start printing the next candle for validation to a continuation to the upside. Now let's look at the quarterly. So take a look at the quarterly, 28 days and 17 hours to close. What is what? The same thing. So this is the 3-month. This is a quarterly chart with a massive bullish engulfing and also a hammer looking like candle after a downtrend, right? So it's, yeah, that's incredibly powerful, and I definitely like what I'm seeing. Let me jump back into the 5-day time frame to show you this. So you know that the new 5-day candle iteration just started yesterday. right? Which is why we have still 5 days and 17 hours here. So just like I said on the upper time frames, you see how this printed as a bullish engulfing, right? So now the next candle printed, and this would be the bullish candle. Look, it came all the way back down to 35.81 before bouncing to the upside. It doesn't mean that we're just going to move to the upside based on this bullish signal. It does take time for these candles to close, and we have to kind of keep that in mind. I'm speaking about candle analysis so much because these are the upper time frames. Larger time frames or macro time frames, that's you dive into potential predictive territory, right? Especially when you're on the monthly and up. Anything below that, is just not as good as a hit rate. So the strike rate within the monthly and up, that's incredibly strong. Okay, so I do suspect this candle to continue here onwards and upwards. And according to the 5-day volatility versus momentum back test here, the upside targets for the shorter time frame, I guess, I'm not sure that it can be completed tomorrow, as I know that we have non-farm payrolls and I think a jobs report tomorrow, right? So that's going to create some volatility in the markets and a potential pause to some of our plays, which would then give us Tuesday next week, because we have Labor Day on Monday, so market closure. Okay, so keep jot that in your notes, right? Make sure that you don't show up for a class on that you don't show up for class on that day, right? So, all right, but anyway. So that's what I'm looking at here, and the probabilities now are really kind of stacking towards the bulls. Okay, so 30-minute immediate short-term time frame RSI, the signal itself is crossing upside of the SMA 14, represented by the pink line, which is a bullish crossover. It is currently sitting in the gravitational zone of the bull weakness percentile. So this is very likely to get pulled to the upside here in the immediate short term. Now, as we cascade into the bi-hourly time frame, you can see here that it is also sitting in the gravitational zone with a bullish crossover over that SMA 14, right? Very likely for this to get pulled to the upside. Now, the 4-hour time frame is currently being pulled to the upside and bouncing from this SMA 14. We spoke about this yesterday as using the SMA 14 opposed to the other iterations, right? So here, same thing happening here, right? So the 8-hour time frame is showing that upside too. Now, I'm not gonna not recognize this, right? Because we are now currently sitting in this side's gravitational zone. This is the bull strength percentile, right? So we're sitting in this gravitational zone here that would essentially bring us back down. And we still have the SMA 14 there, but more importantly, if we do get dragged down here somewhere in the next day, then we could actually find a support from not only the SMA 14, but also the gravitational zone. And that could be a nice reason to make the 8-hour time frame bounce nicely. Okay, now the 12-hour time frame is actually showing a little bit of consolidation here. Same situation with the daily time frame. In fact, just ever so slightly a downside pivot, but please notice that it is in the gravitational zone here, getting ready to get pulled up. And same situation with the bi-daily time frame. Very nice stance in that zone, and the same situation here with the 3-day. And let me see the 5-day. Yeah, 5-day time frame also in the gravitational zone. Everything is suggesting a potential upside with slight consolidation. Okay, but if we do end up getting any type of drop in price action, then I can see the targets of around 38.50 to come to light. Right. So let me see this. Yeah, like today we came back down to 39.68 and failed the candle all the way down to 38.54. Let me see what it was. 38.50 actually directly. So let's go ahead and put a line there and just make sure that we are aware of that potential, right? So we could possibly make an upside here, touch that top side of about 43 cents, maybe even up to 44.50, and then start to come back and kind of chop around this area here before we can actually make a move to the upside. But whatever is happening, it almost feels like fundamentally something is there, right? So it feels like it's brewing. It feels like it's just about ready to pop or something, right? Not to mention here, 8-hour time frame, inverse herpy-derpy printing. And I think 1 or 2 more candles here would solidify that potential here. So now if it does actually capitulate harder, then we have an immediate support. It would be amazing for us to catch entry here at 36.05, 36.02 to 36 flat, right? So just in case it does do that, it would be consistent to the neckline, or yeah, I guess to the upside momentum or the upside pivot for this inverse head and shoulders. Okay, so of course this thing has a price objective for us to look at. We can do that real fast, right? So let's just identify here the neckline for this asset or for the formation, right? So it could be like this. We take a trend line from the center of the head, right? We take it all the way to the bottom side, and then we apply it to that supposed area of breakout, the top of the shoulder, that is. Okay, that would take us to a target of about 69 cents, and I'm sure that we have a very confluent targets there. Let me see what the 69 is actually rhyming with. Okay, nothing there. Let me make sure that I have it all here. Oh, sorry, this was balancer. Here we go. Okay, let me look in here from our immediate short-term targets. 50.44, but the jump that we were talking about statistically jumps up to 80. So, and again, what was that target? We said 69, right? Okay, well, I mean, the 2 fib is directly at 69, so I guess it is geometrically capable here. And yeah, there are pretty, I mean, this candle here, the top side is 70 cents. There are a few candles here that are absolutely rhyming with that, right? 63.33 on that one, and the high of this one here is 68, pretty much. Yeah, 69 cents is pretty relevant. So I mean, remember that that's a psychological target, is not nearly as good as the statistical probabilities. But yeah, I think everything is looking good for ASRE. And definitely expect some sideways trading, maybe some upside action with a potential area to reload, which I definitely will with full transparency, right? We transferred over some money. Hopefully it settles tomorrow and we can gain entry. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good night, and I will catch you at the bell. Mañana. Adios.